Hi, my name is Jana Hall and welcome to Simply Accounting. In today's video, I will discuss accounting and introduce you to the accounting equation. So let's get started. Accounting is known as the language of business. The definition of accounting is the art of organizing, maintaining, recording, and analyzing financial activities. One of the roles of accountants is to keep track of all business transactions. A business transaction is any business activity that affects what the business owns, owes, and the ownership of the business. So the next thing that we're going to talk about is the accounting equation. The accounting equation is assets equals liabilities plus capital, or owner's equity or shareholder's equity, depending on what terminology is more familiar to you. An asset is anything that is owned by the business or organization. There are two requirements for an item to become an asset. It must be owned by a business or organization, and the second one is that it must have monetary value. Examples of assets are coins, bills, money orders, and checks. There are four types of assets, and they include current assets, long-term investments, property, plant, and equipment, and intangible assets. The next thing that we're going to talk about is liabilities. Liabilities are the amounts due to creditors and other interested parties. It is also the ownership of assets of the business by its creditors. An example of a liability would be an apartment or house that you are renting, or also an IOU to a friend. There are two types of liabilities. The first one is current liability, and the second one is a long-term liability. The third part of the equation is capital. Capital is the ownership of assets of a business by the proprietor or the owner of the business. In this situation, the proprietor starts the business. When the proprietor starts the business, they contribute assets such as cash, supplies, or equipment to the business. And the last thing that we're going to do is a little activity, and this will hopefully help you better understand what an asset is compared to a liability. So in this activity, we will determine some of the items on this list as either an asset or not. So the first thing that we're going to do is an automobile. So in this instance, this can be either a liability or an asset. If you are still paying on your automobile, this will be a liability because you do not have full ownership of your car or truck. But if you paid off your automobile and it's fully paid off, then you have full ownership of your automobile, so then it would be an asset. And it's also an asset because if you sell your car or truck, you can get money in return as well. So the second one we're going to do is an apartment that is rented. This, as I said earlier, is a liability because you do not own the apartment and you are paying payments to the landlord or wherever you're paying the payment to. So that will be a liability. The third one we're going to talk about is a IOU to a friend, and that, of course, would also be a liability. So let's say you borrow $20 from your friend, and now you are paying back the $20. That would be considered a liability because you are paying money to them. And the last one that we're going to talk about is an IOU from a friend, which is different from the previous one because in this case you are receiving money. So let's say a friend borrows $20 from you and now they are returning the money to you. That would be an asset because you are now receiving the money. So that concludes our video for today. Next week we will be discussing the accounting equation more, and I will be demonstrating T accounts for the accounting equation. So I will do T accounts for assets, liabilities, and capital. Thank you for watching, and hope to see you next week on Simply Accounting.